Today, the SEC delays making a decision on a bunch of spot Bitcoin ETF applications. Robinhood buys back Sam Bankman-Fried's stake in the company. And Paul Brody of EY explains why he thinks companies can use Ethereum to supercharge their business. Welcome to CNBC's Crypto World. I'm Tanea McKeel. The crypto market kicking off September in the red after capping its worst month of 2023. By noon Eastern, Bitcoin had dropped about 4% to the $25,000 level, while Ether fell 3% to $16.34. XRP was also down more than 3% at 50 cents. The gains made after the Grayscale court ruling just could not last. In the past 7 days, Bitcoin's dropped about 0.5%, while Ether fell about 0.7%. Okay, let's talk about the top stories. First, the SEC just delayed making a decision on a bunch of spot Bitcoin ETF applications as expected. It filed 7 notices yesterday, pushing the deadline to October for proposals for nearly all of the spot Bitcoin ETFs under review, including those from BlackRock and Fidelity. The delay comes 2 days after a court ruled in favor of Grayscale over the SEC, requiring the agency to further review the company's application to convert its popular Bitcoin Trust product into an ETF. The SEC has 240 days to consider an application once it starts the review process. So theoretically, it can keep pushing the latest wave of applications until March 2024. Back in August, the SEC delayed a decision on another spot Bitcoin ETF under review from ARK Invest in partnership with 21 Shares. The final deadline for that proposal now stretches into January 2024. Next, as Bitwise awaits a decision from the SEC on its spot Bitcoin ETF, the firm is pulling the plug on another crypto ETF proposal. The firm requested a withdrawal of the Bitcoin and Ether market cap strategy ETF, saying the trust no longer intends to seek effectiveness of the fund, or in other words, to launch the product on an exchange. Bitwise originally filed the proposal with the SEC last month, and the ETF would have given investors exposure to both Bitcoin and Ether futures contracts. At the same time, though, Bitwise is still optimistic on the approval of spot Bitcoin ETFs. Matt Hogan, the company's CIO and a veteran of the ETF business, told CNBC's ETF Edge on Wednesday that he thinks Grayscale's court win this week means we might see a spot ETF by the end of 2023. Finally, Robinhood just bought back Sam Bankman-Fried's stake in the company. The trading platform announced on Friday that it completed the purchase of all 55 million shares, worth about $605.7 million. The U.S. government had seized those assets from Emergent Fidelity Technologies, which was co-founded by SBF and former FTX exec Gary Wang. Bloomberg reported that Emergent went bankrupt back in February with only that Robinhood stake and $20 million in cash as assets. Just days after that bankruptcy announcement, Robinhood's board approved the plan to buy back those shares. All right, for our main story, let's talk about Ethereum. I caught up with Paul Brody, the global blockchain leader for EY, to discuss his new book on how companies can use Ethereum's blockchain to grow their business. You have a new book out, Ethereum for Business, a plain English guide to the use cases that generate returns from asset management to payments to supply chains. Why do you think specifically Ethereum is the blockchain that will drive the most growth for businesses and not one of its competitors?
The world of technology really, really loves a standard, right? And if you go back 10, 20 years, we used to have multiple different networking standards. Today, everything is internet protocol, which actually started as a protocol to connect up all the different networks, whether it's PC operating systems or network protocols. Industries love standards. And kind of history of technology is one where we tend to end up with monopoly standards. Ethereum's been the leader in that period space for quite some time. Typically, it's really, really hard to dislodge a industry leader or an industry standard after it's been around for 5 to 10 years. So my expectation is for sure there will be only kind of one blockchain ecosystem to rule them all. And at this stage, it looks most likely that it's going to be Ethereum.
Go a little bit further for me on why. We've had a lot of news about companies exploring NFTs or crypto payments, but beyond the hype and beyond the innovation and the shiny new thing, what is the real benefit that you pitch for businesses here?
So for enterprises, the value proposition of blockchain is somewhat independent of which blockchain it is, provided it's a public blockchain. So in that respect, people have called me an ETH maxi, but I'm really an ETH pragmatist. when it comes to enterprises and the value proposition, the real value here is around automating these business relationships that companies have. So, over the last 20 or 30 years, in the course of my career, the big focus in enterprise computing has been this implementation of these things called enterprise resource planning systems, ERPs. And the purpose of ERP is to connect up all the parts of an enterprise together. And the thing that's really, really challenged enterprises is that the minute you leave the enterprise, the minute you want to collaborate with a supplier or a customer, all the really cool things that you've done for the last 20 years pretty much become useless. Like all this analytics, business process management stuff, we're back to like emailing each other spreadsheets or sending each other PDF documents. And the beauty of a blockchain is with a blockchain, I can have a buyer and a seller interact with each other. They can do so using complex business logic, moving assets back and forth, and they can do it in a ecosystem that is neutral and it's not dominated by any central party that could later on monetize their data or anything like that.
So it looks like the goal of the book, it's for executives who may not have the technical background in crypto. So of the execs that you've spoken to, what has that learning curve been like? What is sort of the specific aha moment for business leaders that you've tried to get across?
So there's actually a whole series of aha moments. The first thing happens when you talk to business leaders that they're like, we don't want crypto. We don't want to be in crypto. We don't buy and sell in Bitcoin or whatever. So the first thing is there's this misconception that blockchains necessarily mean crypto. Now, that's one really important one. And we explained to them, stable coins mean that you shouldn't have to transact in anything other than dollars or euros or yen or whatever your business currency is. The second big hurdle we always get to is, well, I'd really be more comfortable on a private blockchain. But the problem with private blockchains is the same as any kind of private centralized system. Eventually, someone is going to be in charge of that, and they're going to they're going to start monopolizing that ecosystem. So eventually, and we've seen this over and over again, we actually did a survey a couple of years ago, almost everybody who tries a private blockchain eventually realizes they need to go to a public blockchain. And then the last thing is, okay, I get it. I don't have to use crypto. I don't have to be on a private blockchain. But now explain to me, what are the actual useful use cases? And the purpose of the book is really in two parts. Number one, explaining how this technology works on public blockchains with things that enterprises need, like privacy. And then secondly, getting to okay, you can do inventory management, supply chain, business operations, procurement. What are the things that you can do? And what's the value specifically to your enterprise of being able to do them?
Regulation has really been the theme of the year and likely will be throughout, through the end of 2023. So for Ethereum, how much of a drawback is the state of regulation for the network? Most of the talk about regulation has to do with the ETH token, whether it's a security or not, but does that trickle into decision making for businesses looking to adopt the technology? And I look at banking, for instance, which has been hesitant to jump all the way into crypto without regulatory clarity. What do you make of it?
And this is exactly it, right? Without regulatory clarity, the finance side of the business is not going to be comfortable jumping in. So that sort of takes a whole sector out of the game for some period of time. I am very optimistic about the regulatory clarity path because in the European Union, in Japan, across the Middle East, and eventually here in the US, we are going to get there. There's court decisions that are moving in favor. There's bipartisan legislation in the US. So I'm generally optimistic that we are going to converge on a good regulatory outcome. But one of my key messages to business leaders is, in most cases outside of finance, you don't need the SEC's approval or any regulatory approvals to do inventory management, optimize your procurement, cut down on your interaction costs with your business partners. None of that's required. You can do all of those things without any regulatory approval.
Can you compare for me adoption of enterprise blockchain technology here in the US versus abroad? Another theme that comes up in my reporting again and again is when it comes to the crypto assets, they say, regulation's not going to kill Bitcoin or anything, but there is the fear of the US losing its edge to the rest of the world because of its strict regulatory stance. How does that trend translate to when it comes to enterprise blockchain?
We are losing our edge. So Enterprise blockchain, not that different from sort of the financial side of things. The US market was bigger sooner than pretty much anywhere else. At the moment, if I look at our business, so last year we were down a little bit with the crypto winter. So far this year, we're actually up in all of our geographies in pretty much every sector. However, Europe and Asia are up to a much greater degree than the US. We've got European and Asian clients who are doing a bit more cutting edge stuff at the moment. That's a change from only about 12 to 18 months ago, where I think US clients were a bit more optimistic. Our US clients haven't stopped working. This is an important thing. Our clients are quietly working behind the scenes. They're still preparing for a day when all of this is going to be allowed, but the pace of preparation has slowed down, whereas it's really speeding up, especially in the European Union, where the markets in crypto assets law, the MiCA laws, are going to take effect in the middle of next year, and that's going to have an incredibly catalyzing effect on the finance side of the equation, especially.
Well, we can't let you leave without talking about the news of the week. So, obviously we have been watching investors sort of weigh the court decision yesterday in favor of Grayscale in its lawsuit against the SEC. That is about Bitcoin ETFs, obviously, but Ethereum, Ether, and the rest of the crypto market broadly did rally after the news. What do you make of that? What is the driving factor behind the optimism for Ethereum? And ultimately, when we look at prices, we're just looking at the assets, but as Ethereum is one of the sort of blue chip assets in crypto, how does the optimism and the hope around a potential Bitcoin ETF affect Ethereum as a network?
So two things there to sort of unpack. The first, on the regulatory and court decisions, to me, the most optimistic thing I'm seeing is that we have this fantastic kind of rule of law experience happening right before our eyes, right? There's differing opinions. The US is a relatively decentralized regulatory environment, so it's not surprising that different regulators won't be fully in alignment with each other. And the courts are acting as kind of a rule of law and a check on this process. And I think encouragingly, what's happening is they're driving everybody towards the consensus table of, hey, what we really need to fix this is bipartisan legislation. So that's one of the things that makes me optimistic. When it comes to ETFs and the flow for assets, there's a couple of interesting things going on. Number one, yes, Bitcoin, it's a Bitcoin ETF we're talking about, but actually there's more, I think, Ethereum ETFs pending in front of the SEC and other regulators than any other major asset. And once these things get approved, it's going to unleash a tidal wave of institutional money, stuff that cannot touch Bitcoin or Ethereum without regulatory approval. So that's one huge impact. And you only need to allocate a very small amount of institutional assets, of which there's a couple $100 trillion around the world, into these ecosystems to substantially affect the price. The second thing that's going on, and this is the area where I think long-term I'm most optimistic around the value of Ethereum as an ecosystem, is the returns on ETH, the staking rewards and things like that, are directly tied to the transaction processing business, right? If you don't think of ETH as a cryptocurrency, if you think of it as a global computing platform that generates return based on the use of computing resources, it looks like a very sustainable, to my way of looking, that ecosystem looks like it has an incredibly sustainable, compelling advantage, an ecosystem of very enthusiastic developers, myself and EY included, in our investments in building applications that enterprises and individuals can use.
Okay, that's all for Crypto World this week. We'll be back again on Tuesday after the holiday weekend. We'll see you then.